Everyone, and welcome to today's market snapshot. My name's Craig Erlam, Senior Market Analyst at OANDA. Now, it has been a relatively quiet day in terms of key economic data. The session in Europe earlier on today was actually quite slow. We weren't seeing any major moves. It seems the start of the US session has sprung things back to life. Now, while a lot of this has been apparently driven by dollar strength, I do think we are seeing a lot of sterling weakness as well. It's not just moves in the dollar. I don't think that is causing this this bit of volatility in the markets, which makes me wonder whether this Carney speech in a few minutes' time, well, in about 10 minutes' time, is the cause of this sudden surge in sterling volatility. I'm wondering if there's been any rumours or speculation about what Mark Carney's going to say, which has caused the pound to fall by around 100 pips against the dollar and fall similarly against the euro as well. It's going to be very interesting to see what happens in this testimony and whether there is evidence that this sterling move is, of course, being driven by these rumours or speculation. Now, there's a number of things which Mark Carney could say which could prompt some sterling weakness. One thing he could do is give a grim assessment of the economic outlook for the UK, sticking by what he said prior to the referendum vote itself. Also potentially highlighting some areas of weakness in the data that haven't come through yet into the hard data. Of course, we've seen things like retail sales, which have been better than expected, export numbers being boosted by the weak sterling, but there's a number of things which could be filtering through into the data slowly but surely, which could suggest we're having negative implications. Things like job openings, things like permanent hiring versus temporary hiring. Things like the inflation outlook data could suggest that the drop in the pound is more severe than the Bank of England anticipated, and the follow through to inflation is going to be worse than expected. There are a number of things and a number of metrics which the Bank of England track which could suggest this. So it'll be very interesting to see what he's got to say here. Another thing which I think could really have impacted sterling, which again is something that could have been on the rumour mill, is in relation to Mark Carney's position itself. We know that Mark Carney did sign up for a shorter term as Bank of England governor for personal reasons. We know that there was speculation that he may extend his position to the full 8 years. But we also do know that ever since this referendum happened and Mark Carney gave these economic warnings prior to the vote, his position has become much more difficult. There's been a number of people who've accused him of being politicised in his economic outlook, saying that he should have remained more neutral. And that has carried on since the Brexit vote itself. He's continued to be in the spotlight for this, and we know that he said on recent occasions that he's going to make a decision by the end of this year whether to continue after 2018. I guess the concern is that if his positions become untenable, if he believes that his viewpoints are becoming the idea that he is becoming too politicised has undermined his position, and if he believes it's in the best interest of the Bank of England, but also the UK heading into these Brexit talks, that he stand down. I do wonder whether there is going to be any indication of at all that this is something which he is considering, and I do think that would hit the pound because it would create further instability at a time when there's also plenty of instability for the UK. He has been an area of strength and an area of solidity over the last few months, and it was his reaction to the Brexit vote itself that I do think brought a lot of calm to the market. So it's going to be very interesting to see what he's going to say in 10 minutes' time. We'll also hear today from President Mario Draghi, who is due to speak. And given that there's been so much speculation about December being the point at which we'll see an update of the ECB's QE program and maybe other forms of stimulus, it'll be interesting to see whether he's going to drop any hints about this here. But like I say, let's take a look at the charts because we have seen a little surge in volatility recently. Now you can see that this has been partially prompted by dollar strength, with the euro dollar over the last couple of hours dropping from around 108.75 through to 108.50. You can see that we've seen a surge in the Japanese yen as well, going from around 104.50 through to 104.85. I think that's quite significant on a daily basis. Let me bring up that chart. I do think that's quite significant on a daily basis because what it means is we've actually gone through the most recent highs in dollar yen, which is something we've been waiting for ever since it broke through the Ichimoku cloud. You can see that we're now seeing a break through the cloud as well from the lagging line, which is very significant. And with the dollar yen now trading at the highest level since the end of July, I think that could be quite a big break to the upside, and that will be driven by dollar strength. But there's no denying that what we're seeing here in the pound is more than likely being driven by sterling weakness. The pound dropping from around 122.20 through to 120.80 is a huge move. And if you want to question whether it's been driven the pound, just look at the euro versus sterling. Euro surging up towards 89.80, closing in on that 18 that 90 level from around 89 where it was trading only a couple of hours ago. This is what makes me think there is speculation, because there's been no major news flow which would account for that move. There has, of course, been the reports today from around Heathrow and the fact that the third runway at Heathrow was approved. That's not going to have impacted sterling. There was a suggestion at one stage that maybe Boris Johnson denying that this Heathrow plan will go ahead could have impacted sterling. I do not believe for a second that that is it. I think this is people preempting this Mark Carney decision, and whether that is being driven by rumours that have some substance or whether it's being driven by speculation alone, we'll have to wait and see. But that's certainly going to be of interest as we're heading to the session. And of course, whenever we see big bouts of sterling weakness, we are now seeing the FTSE outperform on the day. Again, though, what is very key here is I still remain bearish. We've still had a trend line break. We're still trading at only just around 7,050, around the highest levels we've touched over the last week or week and a half, until we see a breakthrough these highs around 71.20 and maybe even back above the trend line. I'm personally remaining relatively bearish on the FTSE at this stage, but I do think sterling strength or weakness is going to be a big significant impact on this. For more in-depth news and analysis, check out OANDA Market Pulse at marketpulse.com. You can also find out more about OANDA and sign up for a free demo account at oanda.com. Here you'll also get access to OANDA Forex Labs, which has a lot of great tools designed to help you with your trading.